Alright, so in this video, we're going to take a look at live examples on the reversal entries. Just like in any other video, we're going to start with the 4-hour structure. Here on Euro AUD, we have a beautiful bullish structure where price is creating breakout structures to the upside over and over again. Here we had a sweep of the previous liquidity, the previous low point, and then price broke the structure to the upside, and even once again, but this low point is unprotected. What we can do right here is to pull the Fibonacci from the protected low point up to the retracement point. Here we are expecting something because once again everything is based on expectations on this 50-minute model, and not just on this one but the other two models. So basically the whole 50-minute entry model package is based on expectations. Once again, we are expecting price to retrace back down to 71 level, we are expecting a confirmation there, and we are expecting that price will go up to continue the structure to break the 4-hour external again. So here we are expecting that price will retrace back down at least to the discounted region below the 0.5 level. So switching down to the 15-minute time frame will show you that how a 15-minute reversal entry model looks like. So here we had the first retracement, we have the first reversal where price reached the top, and from this top it reversed to the downside, and the first market structure shift came into place after the break of the previous low. So here you can see that this is a clean bullish structure on the 50-minute time frame. Coming up, retracing, breaking the structure here, retracing, breaking the structure here, retracing, breaking the structure here again, and then retracing, but the retracement now broke the market structure, meaning the structure has shifted from bullish to bearish on this line. As I told you, we are not jumping on the first market structure shift opportunity, like in a confirmation trade, for example, because it will be dangerous, because it can easily be the sweep of the previous low and price can easily continue to the upside since we are in a bullish 4-hour structure, and trading the counter trend of it on the 50-minute time frame, trading the short side is dangerous without having another continuation break that confirms the previous structure that it has shifted from bullish to bearish. So here, price shifted the market structure, created the last recent low point, and then started to range, leaving lots of liquidity behind on this line. After leaving lots of liquidity behind on this line, it decided to sweep out the liquidity, and from this sweep, it decided to break the last recent low point, which was located here, meaning a continuation break has shown, is there. So what we can do, we can apply the entry model, the reversal 50-minute entry model, if all the criteria is fulfilled. We pull the Fibonacci from this high point down to this low point, and in this case we will see that, yeah, criteria apply because we have a sweep of liquidity, we have a break of structure, which is in this case the second break because the first break has occurred here. So we have a break of structure, we have an order block in the form of this wick. If you don't know what wick order blocks are, please check out the 4-hour entry model, check out the 4-hour strategy, because in the book it's getting explained perfectly. Here from the wick, the volume started, there is a beautiful volume gap, so we can pull the Fibonacci from the high point now, from the previous 50-minute protected high point, because it is protected, because it swept out the tons of liquidity and previous market structure, and then broke the structure to the downside, so it's a confirmed protected high point, meaning we can pull the Fibonacci from this high down to this low, and the entry will be given on this 71 level. We can set the stop loss to the previous protected high, and the entry, the TP down to the 0 level of the Fibonacci, and this is the maximum you can get out of this entry model. Replaying price back, seeing how it reacts, yeah, there is a tag on the 71 level, and there is a TP out on the 0 level. And now, as I told you in the theory video, you are not looking for any more entries, you are not looking for the continuation, you are not looking for scalings, because this goes against the trend. Even you are not looking for these continuations when you took one winner right here, when you're above the 0.5 level, which is in this case this red line. And when prices are rising below the red line, which will be discounted below it, then it most likely will retrace back up. And let me just show you another example, which is exactly on this pair and exactly on this movement again. But we have to replay price back a little bit in case showing you. So here we will have a nice opportunity again, because in this case we have the exact same sweep on the exact same structure, we have the breakout structure here, and the retracement has started here. So you are pulling the Fibonacci from that protected low point up to this high point, and here you are expecting price to arrive back to the 71 level where your 4-hour entry originally is. You have a limit order sorry, you have a limit order set here on the 71 level, and you're expecting the 50-minute time frame to retrace back down to the 71 level. Now, if I switch down to the 50-minute time frame, this event has happened earlier than what I showed you previously, but the same principle applies because there was a sweep, there was a break, and there a retracement has started. And if you take a look at where the retracement has started, you will see that this was the top of the range, the highest point which price has arranged. And then we can say that this was the last recent structural low point. You can also say that this was the low point. These are pretty close to each other, so it doesn't matter which one you line out. One difference is that this low point couldn't body break above the high point. This low point created the last recent body break of structure here. So both of the lows got broken, meaning price shifted the structure from bullish to bearish, but it's not confirmed yet without the break we want to see, without the continuation break. If you take a look at the structure, you will see that after the market structure shift lined out exactly at this region, price retraced. It had a possibility to go up, and it had a possibility to actually title this whole movement to the downside as a sweep of liquidity. But instead of breaking the structure again to the upside here, it decided to break the bearish lower low again, and that is the continuation break you are looking for. You have a new break of structure. And if you take a look at this whole example, you will see that this internal high was taken out right here. The sweep has happened there. From that sweep, price decided to break the previous lower low on the market structure, the bearish market structure, meaning we have a sweep and we have a break. If you put the Fibonacci, we will see if there will be volume and there will be order block above or around the 71 level. And yeah, above the 71 level, there is a really, really nice and decent volume gap located right here. And there is a really beautiful order block located right here, which, just for a side info, price mitigated exactly right here. But here is the confirmation, technically not confirmation, but it is a confirmation entry model as well. But here is the reversal entry model shown in live again. Here is the market structure shift after price started to retrace from the highest point of the structure, shifted the market structure, pulled back, swept out an internal high point, pulled back again here, broke the previous lower low, the bearish lower low was broken. We can apply the criteria system looking for a sweep, break, volume, order block. If everything is there, we can pull the Fibonacci from this high point down to the low point, and we can set the limit order on the 71 level exactly right here. Stop loss goes to the 1 level, TP goes to the 0 level, and we can watch the trade play out, hitting TP. And once again, after having one TP, I wouldn't really recommend you to trade anymore on this entry model, because the case can happen as it has happened on the previous example, where price will retrace, will reach the 0.5 level. It will be discounted below the red line. It will be discounted, meaning it's fairly priced. And from there, price will break the market structure to the upside and will continue the overall 4-hour bullish movement. And here we are again, where we took the technically the first examples. This will happen again. You get the idea. I told you my instructions. Good luck, guys, with all these entry models.